The Federal Reserve cut interest rates to between 1.75% to 2% in order to prevent a recession. So, why did they cut interest rates? And what does this mean for us? Now, this is happening because the U.S. economy is sending the Fed a mixed economic outlook. Because on one hand, we have an expanding stock market that's doing numbers. We also have the lowest unemployment rates that we've seen in 50 years at 3.7%. On the other hand, we are having an ongoing trade dispute with China, which is already having a huge impact on our economy. Secondly, there's low inflation. And we know in a healthy American economy, we're supposed to expect 2% inflation. Right now, we're at 1.6%. Thirdly, we're dealing with an economic slowdown in growth globally. And this stems largely from issues with Brexit in Europe, as well as Australia dealing with their own economic issues. So what does this all mean for us? For one, when the Federal Reserve cuts interest rates, it's actually supposed to spur economic activity. So businesses are supposed to take advantage of low interest rate loans and invest more in their business. One, it could be hiring more people, it could be buying more buildings, buying more land, or investing in new technology or trying new things, research and development. Also, when the Federal Reserve cuts interest rates, it reduces the value of the dollar. So U.S. products abroad become much cheaper and affordable. For example, if you have a Nigerian person that is buying an Abercrombie and Fitch shirt, because our dollar is now cheaper, now our U.S. products are cheaper for this Nigerian man that is trying to buy this American shirt. So in this situation, businesses are expected to increase their sales and export more to foreign countries. And over time, this is supposed to increase actually take us out of the trade deficit we have between us and other countries. And this will make the president happy because a lot of our trade disputes are because of our trade deficit with China. Because although a lot of Chinese buy American products and a lot of people abroad buy American products, we are a net consumption country. We do a lot of consumption and we're consumers. So we buy a lot of products. So overall, we usually buy more from other countries than what they buy from us. So when the Federal Reserve cuts interest rates, on the personal level, it also affects your loans and your consumer products. This includes credit cards, auto loans, even private student loans. All of these rates are affected. So once you get a reduction in Federal Reserve interest rates, you also get a reduction in those rates. With that being said, it might be a good time to take out a new loan, refinance, or renegotiate one of your existing loans. And unfortunately, if you have federal student loans, your rates will not be impacted by cuts in the Federal Reserve interest rates. Thank you so much for watching. Thank you for tuning in. Now when we hear these big news items, we understand how these things impact us. Man, let's get to it. Let's talk about money.